Eventually, I started to strategy hop. Most of the guys do. Try to learn ICT, SMC, liquidity, what is the fair value gap. At a point, it was so overwhelming that, okay, this is too much. You'd have to find something which kind of resonates to you, kind of works for you. And that is when I started to look at what am I good at. Probably you might be very good at ICT. I'm not very good at ICT. I might be very good at it, drawing a trend line. So you could even be very profitable drawing a trend line, but you just have to understand where would the trend line work right and where would it end. That is the only key differentiating.
Sai Prasad,
Yeah.
thank you for coming on the podcast.
Thank you for inviting me.
You're a super successful trader, funded, of course, 600 plus $1,000 in payouts.
Yeah.
You also go by your ordinary trader.
Yeah.
How did you come up with that name?
So the story was a very interesting one. I had a travel YouTube channel called as Your Ordinary Traveler. I used to travel a lot, and I'm someone who travel. I used to bike, and I think I took a like 60-day break in between and went from Kanyakumari to Kashmir. That's like a 15,000 kilometers trip for the entire 60 days, just sleeping in dorms, maybe in tents. It was one of the raw experiences I had. So I had already this channel, which is like Your One Traveler. So if I'm also trading, what do I keep? So when I'm trying to find a name, I didn't get much options. So I was like, okay, let's make it as Your Ordinary Trader. That's the most unique name which I can find over time, which has all social media availability. I was like, okay, let's do this. It's also resonates with the previous band which I have. That's how I came up with the name, to be honest.
And of course, I know the backstory behind creating the name Your Ordinary Trader because you want to be someone in your branding that's relatable. That's the average person that can become something successful at trading.
Yeah.
I want to kind of tap into your early life.
Yeah.
Who were you before trading? How was life like for you growing up?
So it was pretty hard. I'm like the name suggests that you are ordinary trader. So I'm like an ordinary guy who is born and brought up in Hyderabad, back in India. It's a city, and I grew up in a middle class family. We used to stay in like a one bedroom apartment, hardly with $1,000 overall income from the family. It was pretty tough at those times. If thinking at it right now, like how we do well in trading, but that's one of the things which kind of brought me into the person I am right now, where it kind of grew into that personality that, okay, I would have to move out of this comfort zone. I would have to think big. So that's kind of what eventually came up, and that's where it led to me, and that's where I'm sitting here right now because of that.
So you grew up in a middle class family.
Yeah.
How did your parents influence your life as a child?
I know most Indian parents, to be honest, they think trading is gambling. I had one of the fortunate moments that my father was into stock markets. He always had the regret that he didn't invest in the markets well before. Uh, so he's 60 years and he's like, I didn't invest when I'm in 20 years or 30 years old. I would have been like probably in much better position. So he was like, why don't you start looking at markets? So that's where the interest came, where he was like, look at stock markets, look at stock markets. He used to keep, there used to be a news channel which comes out where they talk about stocks, where they talk about like, okay, these are the prices, this is where the stock can go. So it was very fascinating for me at that time. So that's where the foundation lied for trading, to be honest, where I kind of learned what are candlesticks, what support and resistance at that time. So that eventually brought me into trading.
You came from a family, I mean, your father was a trader. What type of kid were you in school? Like, did your mother want you to become a trader or did they want you to become like a doctor, lawyer, engineer, maybe?
Probably an engineer because during that time when I was graduating, Indian parents, they are habituated to a trend. So they look at which is the trend currently which is going. So currently the trend is AI. So you see a lot of people who are trying to push their kids into AI engineering and all that stuff. So at that time when I did it, the computer science was one of them where it was in boom, where all the computer tech graduates were earning in lakhs at that time. So they thought computer science probably is one of the good uh, pathways for me. And I was anyways interested in computers as such. So I was like, okay, why not? Let's do computer science. So that's kind of eventually led me into computer science.
And when it comes to your dad influencing your trading journey, what year was that?
Uh,
Did you go to college and then you decided
no,
school?
it was not. He didn't do it at a very early stage. I
Okay.
would have not been the person right now if he did it at that age. He eventually waited until I graduated from my college and I got a job. I used to work for like $100 a month, to be
That
honest,
was a month.
$100 a month, and he looked at me. I used to go to office in the morning, traveling like 1 hour, and come back after. So it was a very long process. I kind of like used to travel a lot for the job, and the work hours were so hectic. I had to come back by 8 o'clock, 9 o'clock in the night, no sleep sometimes. So he kind of eventually saw the process and he was like, okay, why not you also check out trading? Now you're earning something. Try investing, not into trading, but at least try investing. That's a good avenue for you to not lose money. Probably you'll grow your money much more when you're in the age of 30s or 40s or 50s. So that kind of started after I graduated. He didn't do it when I don't have money. He did it when I started to earn money so that I kind of diversify. That's a good thing, to be honest.
Yeah, it's good he taught you to diversify. And your dad, he told you to invest because obviously you're working a full-time job. Was he a trader? Was he like day trading in the
No,
market or was he more
no,
like
no.
position trader?
He was he always wanted to day trade or learn trading, because it also fascinates him. Like he used to look at all these people learning earning like a lot of money, uh, but he was like he doesn't know all of these technical aspects right now. He used to like at those times he used to call someone and place a trade.
Old
Like if you remember, like it's an old school thing.
I wasn't alive, but I know it's old school.
Yeah, it is old school. So he doesn't know all of this technology because he's like, okay, I don't know what is all this. What is market order? What is like limit order? Like he knows what he'll just call and say, okay, can you place an order at this place? He doesn't know like, okay, I would have to place a limit. I would have to place a stop, something like that. So that's something which he kind of eventually learned right now, looking at trading. But he's more of a very good investor. I see him sometimes making 10-20% in a month, sometimes without even thinking that in a one particular stock. It's not like I'm not like, saying that probably he'll do that every month, every year, but sometimes the stocks hit and they run like crazy with momentum. So I've seen him making very good returns in stocks. Sometimes people think trading is the only way, but not really. You could make that in stocks as well, probably in a week or like in 2 weeks' time.
Yeah. So he was more on the fundamental side.
Yeah.
And when you got into trading, was he there to kind of a lot of people, I guess, struggle with where do you start? Because nowadays there's a flood of information on the internet.
Yeah.
Was he kind of a mentor to kind of guide you to like, hey, go learn price action first, or go read this book, or watch this video?
Not really, to be honest. He was the only one to push me into trading. But whatever I learned, he used to recommend me some kind of YouTube channels. Like, can you go check this out? Can you go check that out? But I did my own research at that time back then to learn. Okay, who is the best mentor? Who is a good guru? Who is making sense to trading. So that kind of led me into like learning from a lot of YouTube mentors, a lot of YouTube gurus. I'm in a lot of trading communities. People see, are you in this community? Are you in this community? Yeah, I am in this community. I probably would have learned from them, but I don't use the methods, whatever they teach. I built my own system on scratch. So, yes, it doesn't mean that they are not good. The only thing is, I would have learned something from them. Probably one mentor is very good at risk management. One may be very good at psychology. So there is something to learn from someone. I still keep learning. It's a continuous process. You keep reading books every day. You keep journaling your trades. All of this is a continuous process as a trader.
Now, your dad was a stock trader.
Mhm.
Did you start off with stocks?
Yeah,
Okay.
I did start out with stocks, and it was pretty good, to be honest. The stocks were pretty peaceful. You have that peace that, okay, you select some kind of a stock, you kind of invest your money in one of the stocks, and eventually you have a very big, wider stop loss. So it is very difficult to go wrong against the trend. Let's say a stock is making a higher. It's very, very difficult to go against it. So you eventually make money either within a week or like probably in a month if you have a right entry. So I started off with stocks, but eventually you kind of see this fast money in futures and options. So that is where I moved to futures and options. To be honest, I was a futures and options trader, and post that, I did a lot of algo systems. So I have a company back in India who built, like we used to build algorithm trading, and there was a lot of algo systems. We used to backtest a lot. We used to see which ones work, which ones doesn't work, what is the equity ratio, all of that technical metrics. And post eventually that I moved into Forex and futures when Indian regulations started to tighten up. So there were like a lot of regulations being put on, a lot of taxation. So I thought, okay, this is not a market which is good, which has good enough liquidity for us to sustain. You would have some kind of sense and peace when you trade. If the Forex market is running 24 by 5 and someone comes and says, no, it is going to be 12 hours tomorrow, it's so hard for you to trade. Which session would you trade? So something like that is impacting traders a lot back in India. But that kind of led me into moving to Forex and also moving to the UK.
When you're working your job for $100 per month,
Yeah.
right?
Yeah.
You're learning trading.
Yeah.
How were you managing your time?
It was pretty hectic. So I I started to learn trading at that time, but I thought, okay, trading. Everyone thinks that trading is like a zero to hero game. Like you start from zero and you can build your $100 to like probably $10,000. Yeah, it's good to see people flip their accounts from 100 to 10,000, but that's a very rare case scenario, which one can do. You would need capital to start to trade, and you would need good amount of capital to basically manage risk. You can't manage your risk with like probably $50. It doesn't make sense. Although the brokers would give you 1 to 1,000, they also know that you are gonna eventually lose that $50 you put in the broker. So it doesn't make sense. So for you to build that capital, that's where I started to look at other opportunities. I eventually got like a $300 job. I thought, okay, probably I'll start investing $100 a month, and the remaining $200 I live off. At the time, I thought it's like a big jump, but that was not enough again. That eventually led me into moving to the UK, finding better opportunities, so that the entire process of my job was to find bigger pay so that I can keep investing into my trading journey,
Mm.
keep investing into my trading account. That's the only process.
So moving to the UK wasn't because of you want to just take full-time trading. You wanted just to find opportunity in a better place where they pay you a lot more money to continuously invest more into your trading career.
So that was one of the thought processes. And also the second thought process is there's, although they say Forex is legal back in India, there's no proper proof that, okay, you can trade legally. It's a gray area. So there's no proper mechanism for you to kind of deposit your funds into a proper broker. So if the funds are taken out by a broker, you're kind of stuck. You don't know where to go. So you need a legal mechanism to do something. So I was trying to apply for a lot of jobs outside India. It's back in Dubai, in UK. Fortunately, I got it in UK. So they sponsored everything for me. I was like, okay, they are sponsoring. Let me go. I have an opportunity to trade Forex now, futures now. Let me try that. But that kind of eventually led me to.
And what job was that you got?
So it was based on IT as well. As I said, I was a computer science grad. I was in IT. I'm building systems for a bank. So it was into like a lot of KYC, AML systems, and I used to do it for a bank. It's a lot of development, coding, Java, Python, all of this.
And how was the transition from moving India to the UK? Did you struggle with the adoption to the environment?
Yeah. So I was a successful trader back then in India. So I used to like earn probably in good amount of money, probably around five to $10,000 a month. And I was thinking, okay, this should be very good enough for me to sustain back in the UK. I still remember I was like, I had like $2,000 or $3,000 in my bank account at that time. I was still, because I didn't want to take out everything from my trading account. And I thought this should be enough when I moved to the UK, or because they were sponsoring me. I thought, okay, this should be enough. Let me come to the UK. And I came to the UK. I saw, oh, this is tough, man. the rents are like $2,000. The cost of living is so damn high. You order food on Deliveroo and it costs like probably $50. And in the initial phase of the 1 month, my Uber Eats and delivery cost was like $2,000. I was like not even cooking at that time. It was so tough. I don't have a because I used to stay in a shared apartment where I don't have the access to the kitchen. They were like, "Oh, you just have to order." So I would order. So $2,000 just vanished like that, just for food. Nothing, nothing.
Same thing in Dubai, the Dubai effect.
Doing
A little more cheaper than
yeah, a little more cheaper, but yeah. So it was pretty hard when you kind of move. The culture differences are also a bit tough. The language barrier was also a bit tough because I'm a speaker of English, but it's the native speaker. The English accent is a bit different in the UK compared to the US or anywhere else. So kind of have to adapt to that. Go to office, meet people, a lot of social networking, a lot of that.
Do you think if you didn't make that move to the UK that you'd be the same person you are right now?
Not really, to be honest. I would have been stuck in the Indian space. Probably I might be successful, not so much as right now, because you got these prop firms right now which are also operating legally back now in India. Even FTMO is back in India right now. So they do have the opportunity in India. So you should just find out how you can utilize it and do it. Probably you don't have the opportunity to trade from a broker, but you do have prop firms.
And I'm sure for the people watching, I mean, you grew up in a middle class family, so you're fortunate enough to know probably more things than the normal person. For someone that's maybe, I know what it's like to be trapped in like your hometown environment and not knowing what's outside of your bubble. How important is it to get out of your hometown or get out of your country, get out of your city?
I think people back in India, they are so laid back. They don't have that mindset to think out of the box. And they think, okay, this $100 is enough, $300 is enough. I'm happy over here. They would have to think out of the box and think that, okay, what can I do to better myself as an individual? Yeah, living in a hometown with $100 is good enough, probably for some of them who was already having a lot of net worth assets, probably because there are some people, their dads would be so rich that they have 10 houses already. They are living on rents, which are coming through. So I'll be chilled out, laid out. But you should have a purpose in life, right? So try to find the purpose in life. And then probably you might move and work towards the purpose, work towards the goal. You came to earth for a purpose, right? So God sent you for some kind of a purpose. You are interbeing me. That's a purpose.
Right, right. And you have so much success now. I know you're a big traveler. You're traveling all the time. You're here in Dubai, going to nice places, nice restaurants, nice hotels. Of course, everything wasn't always sunshine and rainbows on your journey.
Yeah.
What were some low points of your journey to finding success with trading and creating this lifestyle that you have now?
I think the lowest point I had was during COVID, and I lost my grandfather during the process, and my mother was very close to him. Eventually, my mother got paralysis as well. She got a brain stroke. That was one of the lowest points which I had in my entire journey because my mother is also very close to me. She cares a lot for me. She's still texted in the morning, "Did you eat?" So I think that kind of emotionally drained me a lot when I was doing trading as well, and that was one of the lowest points, to be honest.
Mm. And this was 2020 when you had your lowest point. How many years were you trading previously?
Probably around 2 years
2 years.
back in India.
Were you profitable?
The first 2 years, no,
Mm.
because I was profitable back in stocks, but not in futures and options space. But I was, I started to become profitable just by then, like just started because I used to build this algo system, as I said. It was bit profitable. And eventually the market conditions changed that started becoming unprofitable. A system always becomes unprofitable. It's not like you have the edge for 100% of the time.
Yeah,
I
you
had to
have to
stop it at some
start
point.
constantly.
Yeah.
Did losing your grandfather have an effect on your trading? Like, did you take a break away from the charts?
Yeah. So it was emotionally the lowest point I had. So I took off time from chats. I was also away from a lot of activities. Even when the incident happened to my mother, I had to take her physically as well because she was paralyzed. There was a lot of physiotherapy treatments which we had to get it done from the hospital as well as from the home. So I didn't get much time to look at the charts. I had to take off everything as well. And I was also working back then, so I had to take off from office, everything. So you can't have the right mindset and trade. You should have the right mindset, right? So ha- going when life hits you with all of these things, it's very difficult.
So it is important to take time off the charts when
For
you're in
sure.
a low point of your life.
For sure.
And when did things start to turn positive?
I think after the initial 3 years, around the 3 year mark, I
Okay.
started to look at profitability when I understood that, okay, you should try to find a system or like a edge in the market. And uh, psychology and risk management also plays a role. Once you have everything as a package, probably the ev- everything works out for you, and it becomes starts to become seamless, right? That's when I kind of started to find some profitability, and that kind of worked out, just kind of repeating the process.
And you were trading algos, you're building algos with algo trading. Of course, you're manual trading. Do you still feel like, in your opinion, what's better for people? Is it better for newbies? Because there's a lot of newbies, especially like in our community, that want to come in. They ask, "Hey, is there any automated trading system you can help with?"
Mm.
and stuff like that, because they just want an easy way out. Do you think that's a correct way to go, or do you think that manual trading is the best way to go?
So for a beginner, they would have to understand trading in general before they can even look at automated or manual trade. So they would have to understand what's the basic concepts. What is the bot even do? Like what does the algo even do? It doesn't mean that you just buy the bot and you make money 100% of the times. And there is I've been building algos for so long, and there is no system in the world which will work 100% of the time. There's nothing. Uh,
Not even a manual trading system now work
Not even.
100% of the time.
And I've I've tried experimenting a lot, invested a lot of funds, whatever I was earning from trading, and it's practically impossible to find something which works 90, 95% or 80% of the times. And probably you will find one, but it's so curve fitted that it doesn't work in all type of market conditions, or it hardly takes like 5 trades in any. So it doesn't make sense to try finding out a system. But algos do work good for beginners, but you would have to understand the rules and try to build it semi-automated. Don't be 100% relying on the algo. And the thing is, like, you should set some kind of rules, because algo is like, it doesn't think of much, and it just takes a trade when the market is going up, and you will be in a short, you'll be panicking, you'll be doing a lot of things. But you should just trust the system. And if the system is right, and if it's profitable with a good risk management system, then it's good for beginners. But again, you would have to understand, rather than starting off with algos, try to start with something like a rule based system. Like, set yourself a set of rules, try to see if you can follow them, and try to learn trading manually before even you can explore algos, to be honest.
And talking about manual trading, on your path to profitability, what was like the first strategy you started learning? Because of course, I know you built your own system now.
Yep.
Did you bounce through multiple strategies?
Lot.
Was there struggles that you had when?
So as I said, I'm in a lot of communities, and a lot of gurus know me as well. And at this point, they say, okay, this guy is my student. This guy is my student. Yeah, I probably would have learned something from you, but I'm not training your system, to be honest. And uh, the initial systems were, I learned everything from YouTube at that point. It was support and resistance. What is trend line? What are chat patterns? What is an engulfing? So eventually, I started to strategy hop, as most of the guys do. Try to learn ICT, SMC, liquidity. What are all of this? What is a fair value gap? So at a point, it was so overwhelming that, okay, this is too much. Like, you'd have to find something which kind of resonates to you, kind of works for you. And that is when I started to look at what am I good at. Probably you might be very good at ice skating. I'm not very good at ice skating. I might be very good at it drawing a trend line. So you could even be very profitable drawing a trend line, but you just have to understand where would the trend line work right and where would it. Hmm. That is the only key differentiating factor.
And so how did learning all of these strategies develop into what you have now? What are you good at?
So I trade a very simple price action system. So what I've done is I built the entire system from the scratch after learning from thousands of people and reading a lot of books. So this is based on a concept called standard deviation. So it's built on the market volatility, which is the key factor, differentiating factor between all the strategies. Because what happens is you should build a system which works in all type of market conditions. There are systems which kind of struggles when there is chop or when there is kind of low volatility, like in December period, or it might be something like at an all-time high. People don't know where to target. They'll say target a round number. That's not a trading system, to be honest. Yeah, you could target a round number, but you're not targeting round numbers when you're trading within a range. Why are you targeting round numbers when it's out of the range? So that's kind of led me to understand in markets, you would need to have a place to keep your stop loss or a level, and you would need to have a place to enter as well as to place to target. So if I could find a system where which it would give me three lines, let's find out these three lines where I could make a stop loss and target that in the entire week. So that kind of led me into drawing the standard deviation levels, which is based on the volatility of the market. So the volatility is the deciding factor, which is called as IV, or we can also call it as VIX. So VIX gives us the volatility, and the options contract will give us how well the volatility is there for this week. Probably in the corona time, the volatility is so huge that market would move 1,000 pips. When it is not in December, probably it might move 300 pips. So the ranges automatically changed when you do that. So I have the range fixed for each daily close as well as each weekly close, and I mark my levels. I just trade the price action concepts using those levels. That's it.
Basically from zone to zone, right?
That's it. Very simple.
And you're trading on live and prop firm?
Yes.
I'm assuming you had to adjust the strategy from live to prop firm, right?
Yes.
And what's your current strategy when it comes to the prop firms? Like, are you taking like X amount of risk, like per trade, X amount of hours per trade? What's kind of like your strategy in a nutshell?
So many people think trading in live account is similar to prop firms. Prop firms are statistically in a negative way for you. They are here to actually prove you wrong. They are here to basically fail you. So you don't have to be extremely profitable to make it in prop firms. If you have a system with a very good risk reward, maybe a 1 to 2 or a 1 to 3, you can very well get away with the random probabilities. I hope you understand what is like random probabilities,
Of course.
right? So you can very well get away with a good winning streak where you would pass an account and you might go into a drawdown when you're unfunded, and you can very well get away with a good winning streak again back and secure your payout. Although the system equity curve is like straight line, which means you are in a break even phase, but you're getting good 1 to 3 trades, getting a series of losses when in funded, and you're again going back up, which means you're secure in your payout. So even if your equity curve is like this, you'd still make money in prop firms, but you are not making money in a live account. So that's the only differentiating factor between trading prop firms and trading real accounts. So many people think I would need to have a profitable edge. I would need to have like 80%, 90% win rate. Probably you can get away with 50% win rate with a 1 to 2, 1 to 3 system. Just make sure that you have a good series of uh, winning streaks before you have a good series of losing streaks.
Of course. I mean, even if you have a 1-to-1 and you're 51%
Yeah.
win rates, you're still profitable. What is your thoughts on people who trade 1-to-1?
1 to 1 is really good. It doesn't matter the risk reward actually doesn't matter, to be honest. I always look at the expected value. So the EV. So EV is a combination factor between risk reward as well as the win rate. So there's a formula, you could Google it out. It'll give you the expected value. Anything with a positive expected value is always profitable system. So if you have that profitable system, even though it is like a bad negative risk reward, you'll still be ending up net profitable.
And prop firms are huge right now, especially in India and Africa, because it's easy to get access of capital for a little cost.
Yeah.
When it comes to someone buying their first challenge, I'm curious to know your opinion. Do you suggest them to buy one single challenge or buy multiple at a time?
No. So I kind of teach this in my webinar, to be honest. And what I say is the risk model, when you're trading prop firms, your money management has to be right. So people think I'm just investing $30 in an account. Yes, you are investing $30 in an account, but if $30 is all you have, then that's very bad risk management and money management. So don't buy all of them at once. But what you could do is try to have the capital at least in your account, like probably in a bank account, sitting somewhere in crypto wallet. If you want to buy, like, let's say, uh, 10 accounts or like 15 accounts, just have the capital in place so that you can keep reinvesting. Try to take one account, trade it well, try to make it to the payout. If not, just repeat the process. If you can stick to one system and repeat the process, probably you might fail 2 to 3 times, even with a very bad system. The fourth one definitely will get funded. I see people in my comments and in my DM. I've failed 50 accounts. I've failed 70 accounts. How can you fail 70 accounts if you can follow a system? It's practically impossible. Practically impossible to do that unless you're kind of gambling, unless you are like looking at something random and taking some random trades. It's practically impossible to fail so many challenges.
Yeah, it's really interesting how you can have an A to Z formula strategy, yet every single person will apply it differently.
Yeah.
What advice do you have for people that do use a winning formula that has maybe a 60, 70% win rate, yet they struggle to keep the system in place when they apply it to their own charts?
I think it would be probably due to the money they have and probably the psychological issue because they already have a 60% win rate system. And if they are not able to follow that, the one problem is either it could be the capital where they are very low in capital and they're over leveraged. Let's say, as I said in the previous question, right? They have $100 and they invested $50 in one account. They are you would think twice before you take a trade because they're so panicked and they're so under leveraged that I would risk 0.1%, 0.2%. You're expecting to make 15% in a prop firm, which doesn't make sense if you're risking 0.2% to basically do that. So you would have to risk more to make that 15%. There's no strategy or system in the world which can give you 15% in a month or like in 2 months. And whoever watching this, no one has the patience to trade for an year to pass a prop firm because you never know the prop firm will exist in 1 year. So everyone wants to do it fast. And if you want to do it fast, you would have to risk more and do it fast. You can't make it with 1% for sure. Probably in a very good winning streak, you could do it, but uh, you can't sustain that system for like probably 15 months, 20 months, or 1 to 2 years, or like 3 years. So the problem could either be they are over leveraged, and the second problem could be that psychology is messed up because of the over leverage. Right, that's the only key factors for them to not follow their system and not follow the risk management principles, or even though they have a profitable system.
So with CFDs being a gray area in India, there runs a chance of brokerages being shut down. How do you kind of battle that as a trader in India?
So I think you would have seen the recent case which happened, the Xness. Xness is one of the biggest brokers we know, right? So it got closed. And that's the problem when someone is trading back from India, right? You have a set of rules which you have to follow, the government regulation. I don't say it's bad, but the problem is there's nothing legal for you to trade back in a broker. But if someone wants to do it, probably in a better way, crypto is legal in India, so they could probably use crypto deposits and withdrawals for the brokers who allow crypto deposits and withdrawals, rather than using some kind of shady techniques, any kind of broker which is kind of allowing you local payments, which can be like either a bank transfer or probably an UPI payment, or probably like you just deposit to this account and we'll give you the funds in a trading account in MT4, MT5. That's totally illegal. Please don't do that. You're going to lose your money. You're gonna like the trader is just gonna lose everything, whatever they owe. So always try to use crypto. That's one way of doing it. That's still a gray area because you can't legally do it and pay taxes and show that, okay, this is the proof. But the only way you can do this is like using crypto. But don't try to do it using any traditional deposits. You see all of these ads which are running back in India, and you'll eventually lose your funds. And the broker knows that once the funds are here, I don't have to send them back. There's no legality, or there's no any kind of case which you can do. Like back in the UK, you can talk to FCA and get up to £100,000 back, right? If a broker basically does something bad to you, but there's no way you could do that back in India.
Yeah, that makes sense for the broker side. I also want to touch on the prop firm side because you're someone who's big in prop firms.
Yep.
Prop firms, of course, there's so many of them nowadays. There's one being created every other day.
Yeah.
Um, a lot of problems is denial of payouts.
Mm.
So how do you evaluate whether a prop firm is going to be good for you or not?
The only way is to try them.
Okay.
That's the only problem. Or else try to find out the reputation well ahead. Like probably check the Trustpilot reviews, go to Discord and check if there are any rejections. You could probably do your own research by just searching the word rejected. In Discord, you might find my payout is rejected, my this thing is rejected. Or probably go to X and find out and see the longevity of a prop firm, like something like funding pitch. I've got paid close to 58 rewards in total. No other firm is currently doing that. Probably you could have got 5 payouts, 10 payouts, and you'd get banned after that. And FTM was been there from very long. So try to find the longevity and try to find traders who was sustainably making payouts using them. And if you can find them, and if they are getting paid for so long, probably you would be getting paid as well. And pick those firms which are good and try to max them out first. People already have like close to, just from FTM and funding tips, probably they would have close to 700K in funding. You don't need new prop firms. You don't need a prop firm which is giving you a challenge account for $1. People don't fall for this.
Yeah, I think if you make 100K to 300K in funding, you'll be doing pretty good.
Pretty good.
And futures is something that's super popular right now. A lot of people are shifting. I noticed, at least in the creator space here in Dubai, they're shifting from CFD prop firms to futures prop firms. What is your personal perspective on futures versus CFDs?
I think it's a good avenue for people to shift. They do have another source of trading, to be honest. Um, and if you see all of these futures firms, they don't have a lot of rules and restrictions compared to CFD, right? The problem with Forex space right now is due to the recent volatility in gold and a lot of instruments like BTC. You see a lot of leverage restrictions. You see a lot of prop firms doing it, funding pips, 5 years, a lot of them, and even FTMO, right? So a lot of leverage restrictions, a lot of rules that you can't pass it in one single trade or two single trades, etc. So the problem with these things makes traders bit what do you call um, makes traders bit questionable when they are kind of trading these. Will I get funded? Will I get my payout, etc.? So that's the problem. But futures don't have this problem. You trade however that you want, and you kind of take the account for $50. You gamble. They don't care. They'll just get you paid. If you reach to a payout, they'll get you paid. So that's a very good competition to CFD firms. And I think due to that reason, CFDs, whatever CFD's revenue is there, is kind of shifting to the futures models, and the revenue is bit depleting on the CFD side. That might be a problem. That's why you see a lot of these firms also starting futures like funding techs. A lot of them
Yeah.
funded next.
Alpha futures.
Alpha Future.
And what's the rule you hate the most with prop firms? Like if you were to go test out a new prop firm and you saw this rule, what's like a no go rule?
I mean, all of the prop firms have it, but the only problem is they don't clarify it properly. They say the one side betting rule. I mean, let's say gold is at an all-time high. I would eventually keep buying every day. You buy on every pullback. You trade only the buys. Why would I try selling it? There's no, it doesn't make sense for me to sell. And if I pass it by taking buys, then they'll say it was one side bet. It doesn't make sense. At least clarify the rule. If it is like, okay, if I pass it in one single trade, is it one side betting? Or if I even split the trades, it's one side bet. So the clarity is missing in some of the prop firms. That's the rule I hate the most.
Hmm. So after securing 600,000 in prop firm payouts, you're now teaching other traders how to secure funding. What is the reason behind starting your own community? Because there's so many other trading communities out there. What makes you different than others?
So I think I never had the thought of starting a community of my own. And at a point, I was sitting at 40 or 45 payouts from funding pips alone. And I was starting to get that recognition because Khalid was also reposting. And even in Discord, people know me. And they were like, why don't you start something? Can you teach us? How are you able to make this consistent payouts, which no one else is able to do? So could you teach us? Could you do something? And I don't want to be the traditional guru who kind of teaches uh, an extra source of revenue, but I wanted to be that change factor because I learned from so many thousands of people. And I wanted to be the change factor that, okay, what can I help them out? Right. And why am I even doing this? I could probably trade and make $3,000. Why should I even teach them? Right. It doesn't make sense for me. And the enlightenment came that, okay, let me try help traders who are back in India, so like kind of struggling, and they don't have the right capital or guidance. And I was like, okay, let me try teaching them. So I started with the webinar. I didn't start with the community at all. I thought, okay, let me teach them how to trade profits. Let me tell them that, okay, you don't have to have a very profitable system to be like trading them. You could probably go get away with the 50%, 60% win rate systems, and you can still make money. You just need the right risk management model. So the thought process came from there, and I just started with $20. I just said, pay $20, take my model, use it, get funded, and it's beautiful to see some people like started to get funded. You see all those payout certificates, life changing ones. You start to see people getting even $200. They're so happy that first payouts. That kind of uh, started to give me that self satisfaction as a trader. That okay, I'm helping them as a mentor who kind of probably to give that kind of knowledge would charge me like tens of thousands of dollars. So if I can think of that at this moment and think that, okay, let I'm trying to help these guys out. And over the time, if down the line in 5 years, 10 years, if some of them, at least 10 of them, 20 of them, 100 of them come back and say, Sai has changed my life. Sai has brought me something in life which I'm very thankful about. Due to this person, my life changed. That is the biggest achievement I can have rather than me making money from trading or anything. So that's the only purpose I had. So that's why I've kept it so affordable that it's just $20. Like anyone who is able to learn and want to learn, they could probably come and join in and they could understand the model. They'll very well see the results within the time.
So Sai, you're 30 years old. You're on a mission to train traders' lives. Where do you see yourself in the next 5, 10 years? Do you want to trade the rest of your life? Do you want to kind of get out of trading and go towards different route, become more of an entrepreneur?
Yeah.
What are your kind of goals for the next 5, 10 years?
Yeah. So whatever payouts I've been getting and also the money I'm making out of trading, I've started to reinvest into multiple avenues. Currently moving into investing route because investing suited me a lot back then. So I started investing into a lot of stocks, bonds, and gold in terms of that. And also started to build something because I used to love when I build bots at that time. It was like I used to build bots and give it to people. So I was also looking into the avenues where I can build businesses and become that entrepreneur road, where you can build something for traders, because I know something about trading. I know something about computer science. I know about mathematical statistics based on the systems which I built. So I would eventually move into that road where probably I'll build systems for them, and some kind of tools, maybe softwares you might see. And the diversification would help me grow as a person and build that passive income. And once that passive income starts, I don't want to trade for life. And no one wants to do that because it's kind of hectic emotionally as well and also mentally. So it's much better for you to like go to the route where you get that passive income out and live the life you want, probably on an island somewhere. So that's the plan. Yeah.
Awesome. Well, I hope to see you there. And also, if you enjoyed this conversation with Sai, be sure to check out his Passions documentary. Check out the link in the description below. Also, be sure to give Convo a like and subscribe. See you next time.